The US dollar is the powerhouse of the global economy, the benchmark of financial transactions, and the world's reserve currency. But what does being the world's reserve currency mean? Essentially, it's the primary currency that central banks, governments, and companies worldwide hold as the primary store of value and currency for global trade. This status gives the US immense political influence, allowing it to borrow money at much cheaper rates. And lately, there's been a whirlwind of speculation. Headlines scream about the impending demise of the dollar. But is this a new scare? Not exactly. Similar alarms have been sounding since the 1980s, yet the dollar remains strong. But why the recent uproar? Let's talk about the BRICS: Brazil, Russia, India, China, and South Africa, pushing for an alternative trading currency. But before we dive into today's video, take a moment to click that like button and subscribe to our channel. Be sure to hit that notification bell so you won't miss out on our upcoming videos. So a currency collapse occurs when there is a sudden and significant decline in the value of a country's currency, leading to a loss of confidence among investors and the public. This phenomenon typically results from factors such as political instability, poor economic policies, excessive debt, and high inflation rates. When a currency collapses, it can lead to severe economic consequences, including skyrocketing prices, increased import costs, and loss of savings, ultimately disrupting the overall economic stability of the affected country. And this is speculated to be happening with the dollar. The reality check. Historically, numerous nations have faced devastating currency collapses. Instances in Argentina, Zimbabwe, and even Germany post-World War I offer stark lessons. These collapses stemmed from eroding confidence in these currencies' value and utility. Yet, the US dollar stands apart, bolstered by unique strengths. Despite several efforts, replacing the dollar is not a simple feat. It's like comparing the vast oceans of the world to Lake Michigan, large, but not large enough. So why won't the dollar collapse soon? Well, several strong pillars support its standing in the global economy. Dominance in world trade. The dollar is the lifeblood of international trade. It is involved in about 90% of foreign exchange transactions worldwide. This dominance isn't accidental. It's built on decades of trade relationships and economic policies. A sudden collapse would disrupt global trade on an unimaginable scale, something the world economy avoids at all costs. Lack of a viable alternative. While other currencies have strengths, none currently match the dollar's mix of liquidity, acceptance, and stability. The euro, yuan, and yen, for example, are significant but come with limitations, such as regional focus, capital controls, or insufficient scale, making a sudden switch unrealistic. U.S. economic size and stability. The United States boasts the largest and one of the most diversified economies in the world. This economic power underpins the dollar's value. In addition, the U.S. political and legal systems provide a level of stability and predictability that investors crave, reinforcing trust in the dollar. Strong military and political influence. The U.S. military and geopolitical influence are pillars of the dollar's dominance. The ability to project power and shape global policies provides confidence in the U.S. and its currency. This isn't just about might. It's about the network of alliances and agreements that underpin global stability. The dollar's role in commodities markets. The dollar is also the principal currency for pricing global commodities like oil, gold, and many others. This creates a continuous demand for dollars worldwide, further entrenching its reserve status. Deep and liquid financial markets. The U.S. has the most extensive and liquid financial markets in the world. Investors and governments turn to these markets for safety and liquidity, especially during crises, reinforcing the dollar's safe haven status. Global debt and dollar shortage. A significant portion of global debt is denominated in dollars, leading to a continuous demand for the currency to service this debt. Moreover, Brent Johnson's dollar milkshake theory suggests that despite the US's significant creation of dollars, there's actually a global shortage, driving up demand further. Given these factors, the dollar's collapse isn't a simple switch that can be flipped overnight. It's deep-rooted in a complex web of global finance and geopolitics, supported by the United States' economic strength and stability. But let's talk about what if the dollar collapsed. The scenes could be dire. A world where paying off a mortgage with worthless dollars becomes a harsh reality. Skyrocketing import costs. As the dollar loses value, the cost of importing goods into the United States will skyrocket. This is not just about luxury items. It includes everyday essentials like food, clothing, and medicine. Foreign suppliers may demand payment in more stable currencies, making imports prohibitively expensive and leading to widespread shortages. Government financial crisis. The US government, accustomed to borrowing at will thanks to the dollar's reserve status, would find itself cornered. Unable to borrow or at exorbitant rates, it might resort to printing more money to pay off debts, leading to hyperinflation, or raising taxes dramatically, placing a heavy burden on already struggling citizens. Unprecedented inflation. With more money chasing fewer goods, prices would skyrocket. We're not talking about normal inflation rates. We're discussing hyperinflation, where the cost of living could double within days or even hours, devastating savings and earnings. Economic collapse. The economy could enter a severe recession or even a depression. Businesses unable to afford imported materials would shut down, leading to massive unemployment. Consumer spending would plummet, further deepening the economic downturn. Real estate market crash. Interest rates would likely soar as a response to inflation and the government's desperate attempts to stabilize the economy. This would result in mortgage rates rising dramatically, leading to a sharp decline in home values and an increase in foreclosures. The dream of home ownership could become unattainable for many Americans. Global economic shift. The dollar's collapse would send shockwaves through the global economy. Other countries holding vast amounts of dollars in their reserves could see their own economies destabilized. International trade could grind to a halt or shift dramatically as countries scramble to find alternative trading currencies. Social and political consequences. Economic hardships often lead to social unrest. The collapse could trigger widespread protests, increase in crime rates, and even lead to political upheaval as people demand changes and solutions from their governments. Outro. In the unlikely event of a dollar collapse, we would see import costs skyrocket, government borrowing costs balloon, and a precipitous economic downturn. Personal assets, including 401k plans, could drastically lose value due to rampant inflation. But before we give in to doomsday scenarios, let's remember, the dollar is not on the brink of collapse. It's woven deeply into the fabric of global finance. While its future might hold changes, experts believe there's time before any potential collapse. This time is a golden opportunity for individuals to make informed decisions, like investing in assets like real estate, to safeguard against future uncertainties. Thank you for watching. Subscribe for more insights and share your thoughts on the dollar's future in the comments below.